Welcome back, dear learners. Before the ad break, we defined what is a post-adjustment trial balance, and we also learned the acronym dead click. Now, what we have here is a pre-adjustment trial balance, and I believe we have adjustments that we're going to make so that we can have then our post-adjustment trial balance. Let us begin. Adjustment number 1 speaks to a credit note. Here's adjustment number 2. It is speaking to physical stock taking. Then adjustment number 3, we have received an EFT. Then adjustment number 4 has to do with insurance. Adjustment number 5 has to do with rent. Let us deal with them individually. When looking at the adjustments individually, we'll start with the first one, which reads, a credit note issued to Smith for 1,200 was not recorded. The business uses a markup of 50% on cost. This simply means that a debtor has returned goods to the business. Therefore, we need to adjust for this. Here they have given us 1,200, which has to do now with the selling price of the goods that we returned. But we are told that the business uses a markup of 50% on cost. Now, we need to calculate the cost as well, so that when we adjust for the 1,200 as well as the cost. In order for us to get the cost, we would then say 100 over 150 multiplied by 1,200. And if you punch that in your calculator, you will get 800 rands. So as we will start with the general journal, you will see I will have two amounts. The first amount is going to be 1,200 and the second amount is going to be 800. These are the two amounts that I'm going to use when I adjust. In the general journal, we would therefore debit debtors' allowances because we have a credit note that we're recording and it is 1,200. And we'll credit debtors' control, 1,200. Remember, we calculated this 800 when we said 100 over 150 multiplied by 1,200. And therefore, we will debit trading stock and we will credit cost of sales. Once that is done, that means you can now record this in your general ledger. Remember, in your general ledger, your debtors control increases on the debit and it decreases on the credit. That simply means you take the total that is in the pre-adjustment trial balance, 52.5, and you are decreasing it with 1,200, for we have a credit note of 1,200. That will decrease our debtors control. And the double entry for that is we debit now in our debtors allowances, 1,200. For the other amount, which is the 800, remember what we did here. We debited trading stock. That means we come to our trading stock, we'll debit it, and here is 800. And then to complete double entry, we are coming to our cost of sales, which is an expense. It increases on the debit side, so we come and then we credit it with 800. Remember what we want to do. We want to show the effect of this adjustment in the post-adjustment trial balance. When all your accounts are done, then we are ready now to post to the post-adjustment trial balance. So you can see here the four accounts that were affected by the adjustment: your debtors control, your debtors allowances, your trading stock, as well as your cost of sales. And let's now see how it will affect our post-adjustment trial balance. You see on the trading stock, I put a question mark. I'm going to show you when I do the next adjustment how it will affect my trading stock as well. But for your debtors control, if you come and say 52,500 minus 1,200, you get your 51,300. And your sales remains the same. But your cost of sales, if you say 619,980 minus 800, you get your 619,180. And then lastly, your allowances, if you add these two amounts, you get 23,700. 2,730. Let us therefore look at the next adjustment. It reads, a physical stock taking on 28 February showed the following on hand. Trading stock 87,000. So we have trading stock of 87,000 on hand. When we have this, we would therefore calculate trading stock deficit. And in this case, it is 2,300. Someone is asking, but Mr. CB, how did you get this 2,300? Let me show you. You come here, remember our trading stock account, which increases here. So we had 88,500, and we have the cost of sales. Remember, these were the goods that we returned, and we recorded it as 800. Now, if you add these two amounts, you would therefore get 89,300. 89,300 when you add these two amounts. But we are being told that after a physical stock take, we found that we had trading stock of 87,000 on hand. What does that mean? In our records, we have 89,300. That is in the records. We have 89,300. But according to the physical stock taking, we have 87,000. So if we get the difference between 89,300 and 87,000, that will give you 2,300. And you can see that it means the physical stock take is less than the stock that is in the business records. Therefore, we end up with a trading stock deficit. And when we have a trading stock deficit, we therefore debit it because it is an expense. And therefore, we credit our trading stock. Hence, you see, we have credited our trading stock account with trading stock deficit. To complete double entry, therefore, it means we come into our trading stock account and we debit it with trading stock 2,300. Here is how it then appears in the post-adjustment trial balance. We would therefore debit trading stock 87,000. This is the one that was on hand. And we have calculated trading stock deficit 2,300. So we come and bring it in the nominal account section on the debit side, 2,300. Why debit? Because it is an expense. A physical stock taking on 28 February showed the following on hand. Consumable stores 1,500. In the pre-adjustment trial balance with packing materials of 25,000. Now, we are told that we have consumable stores on hand of 1,500. In the general journal, you would see we debit consumable stores on hand and we therefore credit packing materials 1,500. In the post-adjustment trial balance, you see on the debit side, we record our consumable stores on hand under the balance sheet account section because we consider it as an asset. And then we come to the nominal account section. We are now saying the packing materials, which was 25,000, minus the ones that are on hand, 1,500. That is how we end up with 23,500. Dear learners, let's go for an ad break and I'll see you shortly.